even with all the trade worries and negative headlines out there, the stock market has actually remained pretty resilient. The market has yet to move back to those May and June lows. So for more insight, we're joined now by Eddie Ghabour, co-founder of Key Advisors Group. Eddie, great to have you here. What do you make of that? I mean, it certainly feels worse right now in the market than it did back in May and June, but yet the low in May and June is lower than the low we've had recently.
Yeah, and that's why right now we are telling any individual investors that are overweight equities and have been for this year to actually sell into this strength. Because right now, from a short-term perspective, the markets are going to be very jittery because of the uncertainty with trade. Yes, President Trump has softened his stance, which gave us a little bit more of a boost. But as we all well know, that can change on a dime. And so when you have so much uncertainty and the fundamentals short term maybe aren't as bullish as they have been over the last few years, I think it's prudent for everyday investors that are out there is to make sure they understand the risk they're taking and possibly increase some cash positioning in their portfolio if they're overweight equities, because I think we're going to continue to see some downward pressure.
Now, Eddie, we're talking about uncertainty. Now, that isn't necessarily the same as a recession, and it's interesting to hear what our guests on all our live shows over the last few weeks say about a recession. You have some coming on saying, oh, yeah, it's coming. It's just a matter of when, how soon, but it is coming. And then others, just yesterday, we had a guest saying, absolutely been overblown. The headlines are stoking that fear, and the headlines have the risk of making a recession happen by kind of stoking terror among consumers and making them take money off the table. What do you think? How likely is a recession right now? And are people overreacting to things like the inverted yield curve?
I don't think you're overreacting to the inverted yield curve. I think the one thing people have to understand is the inverted yield curve is something that is a cautionary sign. I pay a lot of attention to the yield curve, and I think an inverted yield curve is definitely something to be cautious about. But I think the thing to understand is it doesn't mean a recession is imminent because the yield curve is inverted. That just means that there is a sign that there's softening out there, and there is concern in regards to risk. And that's why you're seeing CapEx spending come down. So do I think there's a likelihood of a recession in the next 6 to 8 months? I would say it's a very small chance of a recession here in the U.S. simply because the consumer is so strong. Frankly, that is what is holding our economy so strong right now is the consumer. So the next red flag I would see is if you start to see consumer confidence go down with the business spending going down, then I think you see a much bigger red flag in regards to a recession. But I think people that are saying a recession is imminent, I think they're overblowing it and they're scaring investors, unfortunately. But again, there's certainly softening right now in the economy. There's a slowdown happening. And then if the tariffs come into effect, like they're scheduled to in September and December, that will add some additional economic pressure. But again, I wouldn't be surprised if maybe they punt and delay that as well, too.
Angela Kimlani here. So I'm glad you brought up the consumer part because that is something that we've been hearing a lot about. What about the idea that the consumer spending is strong because of e-commerce being, playing a major role? What are your thoughts on that?
Well, I think e-commerce continues to have a huge role in the consumer, but I think right now one of the biggest things with the consumers, when you look at the wages and the unemployment numbers, the labor market is so tight that people feel comfortable and confident that they have job security. And I think when you have that confidence as a consumer, you have more confidence to spend. And as we know, 70% of our GDP is based off of consumer spending. So as long as the labor market stays tight and the wages stay where they are or even potentially go up, that's going to continue to hold our economy above the rest around the world.
All right, Eddie, we certainly appreciate your insights this morning. Eddie Ghabour, co-founder of Key Advisors Group. Thank you.
Thank you for having me today.